Hello everyone, welcome back to Safe Stock Investments. Can Jio Financial Services become India's next financial powerhouse? The latest Q1 Financial Year 27 results reveal 8 powerful growth signals every investor should understand. Let us begin with the most important growth indicator, namely assets under management. The company's assets under management have increased from 257 billion in March 2026 to 307 billion in June 2026, representing nearly 19% growth on quarter to quarter. Consistent asset under management is important because it lays the foundation for higher interest income and future earnings. There is a steady improvement in net interest income, which has increased from approximately 2 billion to 2.58 billion in Q1 financial year 27, reflecting around 28% quarter to quarter growth. This indicates that expanding loan portfolio is beginning to generate stronger core earnings. Sustainable growth in net interest income is one of the most important indicators for any lending institution because it reflects the strength of its core business rather than one-time income. Rapid loan growth is beneficial only when asset quality remains healthy. Despite the expansion in lending, credit cost remains low at around 0.4% of assets under management. This suggests that Jio Financial Services is maintaining a disciplined lending standards while scaling its business. Low credit costs help protect profitability and reduce the risk of future non-performing assets, making this a positive signal for long-term investors. Jio Payment Bank's current and savings account customer base has increased to approximately 3.9 million, showing consistent growth over the past several quarters. A larger customer base strengthened the company's financial ecosystems by creating opportunities to cross-sell products such as loans, insurance, investments, and payment services. Customer growth today can become an important driver of revenue tomorrow. Massive expansion in business correspondent network highlights one of the company's biggest strengths, its expanding distribution network. The business correspondent network has grown to more than 527,000 touchpoints across India. This extensive reach enables Jio Financial Services to serve customers even in smaller towns, rural markets. Strong distribution network can significantly accelerate customer acquisitions while supporting financial inclusion across the country. Customer deposits have steadily increased to around 6.17 billion. Growing deposits are encouraging because they provide a stable and relatively low-cost source of funding for future lending operations. A stronger deposits base also enhances financial stability and reduces dependence on external borrowings, supporting the company's long-term growth story. Digital payment business is accelerating the transaction processing volume, which has increased from 146 billion to 192 billion, representing around 31% quarter-to-quarter growth. This indicates rising adoption of Jio's digital payment platform by both merchants and customers. As India's digital payment ecosystem continues to expand, sustained growth in transactions volume could become a major contributor to the company's future earnings and operating leverage. The consolidated profit after tax increased sharply to approximately 8.3 billion, representing about 180% year-on-year growth. While this heading figure is impressive, investors should remember that the company continues to invest heavily in new business such as asset management, insurance, and wealth management. If these investments begin contributing meaningfully over the coming years, Jio Financials could emerge as diversified financial services platform. At the same time, investors should continue monitoring profitability, operating expenses, and executions in future quarters.